Welcome. Today, we're going to cut through all the noise. We're going to talk about the two fundamental paths that determine your financial future. It really comes down to a choice every single one of us has to make. Are you going to build your wealth with a disciplined system, or are you going to gamble it away on pure speculation? Let's get started.
You know how it is. You turn on any financial news channel and you're just hit with this wall of sound. You've got one expert telling you with total confidence that an explosive rise in something like gold isn't just coming, it's already getting started. This is that siren song of the speculator, the promise of fast, dramatic money. But then you flip the channel and just a moment later you hear another expert completely dismiss one of the hottest trends in the market. You've got the AI boom, a sector driving massive gains, being called overblown. So one voice says buy, the other says sell. Who are you supposed to listen to? And look, it's not just about specific stocks or assets. Even the basic, long-held wisdom of the market gets challenged. The idea that lower interest rates are good for stocks? Well, now some are calling that the dumbest narrative. This just creates an incredibly confusing, frankly chaotic landscape for anyone trying to build wealth for the long haul.
This constant barrage of conflicting information, that is the world of the speculator. It's a game based entirely on prediction, on trying to guess what's going to happen next, and on gambling that your guess is somehow better than everyone else's. Just take a look at this. It really organizes the chaos for you. For every single topic, gold, AI, Fed policy, the economy, there's an expert predicting it'll go up and another predicting it'll go down. Let's be perfectly clear. Trying to pick the winner here isn't investing. It's gambling. It's a coin toss with your family's future.
Following the speculator's path is, frankly, a fool's errand. It demands that you do the impossible. It requires you to be an expert economist, a perfect market timer, and a psychic who knows which guru is telling the truth. The odds are just not in your favor. And this right here, this reveals the speculator's greatest weakness. The fight isn't just against the market. It's against your own human nature. Your two worst enemies, fear and greed, are always there, pushing you to buy high on the hype and sell low in a panic. That is the fastest way to destroy wealth, period.
But, okay, there is another way. A much calmer, more durable path that doesn't rely on some crystal ball. We're going to move from that frantic world of prediction to the steady, reliable world of principle. This is where real, lasting wealth is actually built.
So instead of chasing the news of the day, this approach is built on principles. These aren't hot tips, they're fundamental truths about how markets, and frankly, how reality works. They are the solid foundation for a system, not just a series of one-off bets. The legendary investor Ray Dalio said it best. Principles are like recipes for success. They give you a tested framework for making decisions, which allows you to operate systematically through all the market's ups and downs, instead of just reacting emotionally to every single headline.
So that brings us to the crucial question, right? What is the central principle for building a resilient, long-term portfolio? What is the system that can actually work no matter what the economy is doing? Dalio calls this the holy grail of investing. And this is absolutely key, so listen closely. The goal isn't just about chasing the highest possible return you can find. No. The primary goal is to get strong returns while systematically eliminating the risk of a catastrophic loss. True wealth isn't about that one big win. It's about avoiding the one big loss that takes you out of the game for good. And here's the recipe. It's based on data, not on someone's opinion. You combine 15 to 20 different assets that don't all move in the same direction at the same time. Think of it this way. When stocks are having a bad year, maybe bonds are doing okay. When real estate is flat, maybe another part of your portfolio is performing. These are called uncorrelated assets, and they are the building blocks of a truly stable portfolio.
This chart shows you the power of that system perfectly. A single asset is a roller coaster. It's all highs and lows. A diversified portfolio, on the other hand, is a steady climb. By combining those uncorrelated assets, you dramatically lower your overall risk. You smooth out the journey, and that allows you to stay invested and let compound interest do its quiet, powerful work.
So all of this, it brings us to a fundamental choice. Every single person trying to build wealth has to decide which role they're going to play.
So you have to ask yourself, which one are you? Are you the gambler, chasing forecasts, driven by emotion and following all the noise? Or are you the architect who relies on a proven system, stays logical, and builds for long-term resilience? The approach you choose won't just influence your outcome, it will literally define it.
Ultimately, your long-term success has very little to do with any single market call or any hot tip. It has everything to do with the core philosophy you choose from day one and the discipline you have to stick with it through thick and thin.
And so, we'll leave you with this question. The choice between reacting to every storm that comes along and preparing for any weather, that is the most important investment decision you will ever make. Will you spend your life trying to predict the rain, or will you get to work building the ark?